How's it going, everyone? Welcome back to the channel. Today we're talking about Li Auto stock, and I'm going to mention the November deliveries for that company. And before we get started though, if you're new to investing or you haven't started investing with the Webull platform, definitely get started today. You can start trading on your computer or your phone. Download the app. There's a link in the description. Again, like I said, limited time offer where you get 4 free stocks. You get 2 just for signing up and an additional 2 stocks when you deposit $100 within 100 days of signing up. So definitely take advantage of that free money. And now let's begin with the video. As you can see, Li Auto delivered 4,646 Li ones in November 2020. So they are continuing their growth momentum. And as you can see, the deliveries have been increasing since quarter one. Quarter one, they delivered 2,800 vehicles. Now quarter two, they doubled that number, actually more than doubled it. They got 6,600. Now on quarter three, they actually, they got 2,000 more vehicle deliveries. And overall, just in general, from January to November, 11 months, they actually delivered 26,000 vehicles total, or Li ones. So very good gain right there in deliveries. I mean, that's good for the future of this company, especially because XPENG delivered 4,000 vehicles in November 2020. So Li probably got like 400 more around there. Yeah, exactly 422 more, which is decent. Yeah, Li's doing a lot better than XPENG, surprisingly. Overall, this is just great for the company because that's a big milestone that they're actually approaching, which is the 5,000 delivery mark, and that was a daunting milestone. It's been hard for these companies to be able to achieve this many deliveries. So now that they have been delivering on monthly and quarterly results, that means that new money and also institutional or smart money is going to come into the market, and they're going to be buying up these shares for Li and XPENG, NIO. And yeah, I know there's a lot of fear in the market because of the possible delisting of these companies. I don't think that's going to happen. There's actually a community post on Yahoo Finance that I want to talk about today towards the end of the video, so you guys can skip to that if you guys want to see it. But basically, there's a lot of people talking about their opinions basically on what they think is going to happen, and most people they argue that it's a good thing that this is happening, that this may increase how strict regulations are against these Chinese companies, and that may add more auditing and processes regarding that. And so it's something like Luckin Coffee doesn't happen to NIO or Li or Alibaba. So this is kind of like a good thing, and some people are avoiding it like the plague, but this is actually not the worst thing that could happen to NIO holders or Alibaba holders. This may be the start of something good for these companies. Who knows? I do want to talk about that towards the end of the video, but before I get to that, I do want to mention the institutional ownership of Li Auto, which is around 9 to 10% if you include the other institutional and mutual fund holders. Now, this is smart money. This is a lot of money. This is people moving around millions of shares. So as you can see, as of September 30th, Credit Suisse Securities bought 10 million shares of Li Auto. UBS Asset Management in Switzerland bought 5.9 million shares of Li Auto, and Morgan Stanley and Co. bought 5.4 million shares of Li. So as you can see, they have especially for these top 3 owners of Li Auto, they have a lot of shares. So 5 to 10 million is a good amount. They're holding this for the long term. They're not holding for 1x 2x on their money. They want a 5-10x long term. So this is definitely showing that they are bullish, and we should also be bullish, because now that the price dipped a lot for Li Auto, and looks like we're going to be moving up now that people are buying the dip. When it went up to 40 something dollars recently, that was a bull trap. That was the best way I could describe that was, it was a bull trap, and then people just started shorting it from here. As you can see how it went all the way down back to 34. So it could move down lower. It could actually go to 30, or who knows, maybe even under 30 by the end of the week. But what this will allow you guys to do is to accumulate more shares for cheaper, and also dollar cost average. Moving on, a quick glance at the top 25 automakers by market cap. You can see NIO's knocked down to number 7 with a 61.79 billion market cap. XPENG is still at number 12 with a 37.69 billion market cap. Li Auto has just under 30 billion. So these companies are rising, though. I see them moving up in the future, possibly have all 3 in the top 10. and top, automakers by market cap. That could be something to look out forward to. We've already seen NIO crack the top 5, and XPENG looks like it's trying to go for the top 10. It's going to be interesting. Like I said, there's already two companies from China that are already in the top 10. That's BYD and NIO. So it's going to be interesting when you have 3, and then who knows, maybe 4 with XPENG. That would be, with Li, when you have Li, XPENG, NIO, and BYD all together in the top 10, it's going to be signaling a takeover. Hopefully not, but if you're holding those stocks, if you're well diversified into those 4, then that's going to be good for you. But for Tesla holders and all that stuff, it just means that these other companies are going to be swallowing up a larger portion of the car market. But the EV stocks are falling despite upbeat call by Goldman Sachs. I featured this article recently on my previous video today, but one thing I didn't really mention much and elaborate on was the fact that Goldman Sachs upgraded Li Auto from $20 to $60. And guess where we're at? We're at $34, meaning if we go down to $30 or $29, which is possible if we keep trading in the red for another few days, that means that if you end up buying Li Auto at $30, you're buying it at half of what this price target is. And the Goldman Sachs doesn't just upgrade anything. They take forever to realize that they messed up, or that when they downgraded NIO, they messed up, right, by saying it's a $7 stock. Obviously they weren't right on that, so they then went back on what they said, and another analyst from there was like, hey, let's raise that price target 7 to 59. So this is huge for these two companies, but more is a lot bigger for NIO, because NIO was the one that was getting criticized the most by Goldman Sachs. And also Li is like the underdog, but it's still up there. I feel like because it's outselling XPENG. It's not yet outselling NIO, but it's still creeping up to NIO. It's going to be interesting to see if it actually does reach $60, because so far we've only seen Li Auto get to $47, around there. So if Li ends up cracking the $50 range, then anyone who bought calls that expire this year, you guys are going to be rich. I'm just telling you, depending on how much you invested into it. So in this last portion of the video, I just want to mention this. This is from the Yahoo Finance community. So this is conversations and reactions around NIO stock, and people just commenting their opinions on. And some people that were fearful, were saying, oh, it's going to possibly be delisted. But there's some people that are actually sort of making sense, that are arguing differently about this. So this is what I want to mention. If you're feeling down or you're feeling bearish about NIO, XPENG, or Li because you think that they might get delisted, well, hear this out. Let me know what you guys think about this, because I don't agree with this. I just want to share this. This is just someone else's opinion. So the closing bell, he said, I normally do not make posts like this, but it blows my mind that people will put their life savings into a stock and do not do any research or DD. Someone explained to me what is bad about a vote that, if passed, could simply have China-based companies undergo an audit process by a US regulator. This is actually a good thing. Literally, it is to make sure that another Luckin Coffee situation does not happen. Its purpose is to weed out the sketchy companies, which is already a reason why a lot of US investors are already hesitant to invest in Chinese companies to begin with. This process would give more transparency and protect US investors. Worst case scenario, companies would have 3 years to comply, and if they do not, then and only then will they be delisted. If a company is honest, which NIO very well is, as they are audited by a very reputable auditor, then there is no reason why they would mind having a US regulator simply have annual reviews to make sure everything is in check. Exactly. This made a lot more sense to me. Guys, please do not let that fear in the market cause you to sell so many shares, especially if you had a high position in NIO, because who knows, what if NIO goes to 60 and then you sold and now you're priced out. Now you got to buy them at $60. Like, it's crazy. There's already price targets saying that NIO is $60, $57 to $60. So it's gonna happen one way or another. If we approach NIO Day and in January 9th, or just we get Q4 results for 2020, which will be in sometime during 2021, then that will probably send the stock flying up there to $60, because $60 is not far away, really. It's only $3 more than our all-time high for NIO. So it's very possible that we can get up there. I'm not telling you to go buy calls. This is not financial advice, and I'm not a financial advisor, so do not take this as financial advice. My disclaimer is in the description. This is for entertainment purposes only. I like making YouTube videos for fun. I hope you guys enjoyed this video. Leave a like, comment on it if you enjoyed it. I'll see you all later. Peace out.